Hello and welcome to ETBFSI. Today we are in conversation with Shivashish Chatterjee from DMI Finance. Welcome on the show, sir.
Thank you. Glad to be here.
How do you see the NBFC situation right now? There is the liquidity situation which is happening. How do you see the overall competitiveness in the industry?
I think the NBFC situation, as it is unfolding today, is actually in the long term very good news for the sector, because it shines a light on practices that obviously need to get rooted out. Historically, I'm sure some of these practices have existed, although I don't believe that it's a systemic problem. These are isolated cases. But these isolated cases, what they do is that they freeze the entire system. And as a result, it feels, when you're in the middle of it, it feels like this is a really, really bad thing. But at the end of the day, cleaning out the system, creating transparency, putting in best practices, putting a focus on ALM, which has historically, in many cases been missing. This is all part of the maturation process of the ecosystem. As we move from a purely banking-driven credit market to a more capital markets-driven credit market, all of this is very, very essential. And adopting international best practices is what's going to get us there.
On the same side, the digital lending is booming, the consumer finance is booming quite a lot. The growth is very unprecedented. So how do you see that growth, which is very unprecedented? Do you see it as a kind of a bubble, or do you think that there needs to be some checks and balances there?
So I don't think this is anywhere close to a bubble, right? You're absolutely right. Growth on the consumer side is unprecedented, but it's happening from very, very low levels, right? So what that means is that if you look at how something like India Stack has impacted the productivity of the country as a whole, how something like GST has impacted the productivity of the SME, MSME sector as a whole, maybe we don't see that yet, but we will see that over the next several years. The volume of lending that can be extended to the consumer segment, to the SME, MSME segment in India, because of the adoption of digital, because of the growth of the economy as a whole, has been estimated anywhere from several hundreds of millions of dollars to $1 trillion over the next 5 years, right? So in that context, we are not seeing anything near where we need to be before this starts to remotely look like a bubble, right? I think we haven't even scratched the surface yet. Where I do think we need to, as an industry, be careful about is that the gross numbers can hide local pockets of problems, right? Just as we saw in the real estate sector, where at an aggregate level, the country has a shortfall of, at this point, some people estimate there's a shortfall of as many as 60 million homes nationally, right? And yet there is a real estate problem in the country. The reason is that supply and demand didn't match up, right? So the demand for real estate was in the affordable housing sector. The supply of real estate was in the luxury sector. And so eventually, even though at an aggregate level, it looked like there was a huge demand or huge unmet demand, it still led to problems. Similarly, when we talk about consumer lending, we have to be careful that we don't all try to lend to the same people, right? So what that means is that a very, very small segment of the population is deemed credit worthy, historically speaking, right? So that would say, 700 or 750 plus CIBIL score, right? That number is in the tens of millions, okay, compared to a population of 1.3 billion people. Now, if every new lender goes in and says that I need to focus on lending to this population, right, you will end up with over-leveraged segments. Similarly, if every lender says, I only want to lend in the NCR, or I only want to lend in Bangalore and Bombay, you will end up with over-leveraged segments. Whereas those differences, those incipient problems will not get highlighted when you look at the aggregate numbers for the country. So it is important that we have inclusive growth. It is important that we push the credit availability down and make it inclusion finance.
So coming to DMI Finance, so how has your growth been since inception? What are your key business focus areas, and how do you see the overall market for DMI Finance?
So in the context of DLAI, DMI is one of the very few digital NBFCs, and that's a loaded term. But what I mean by that is that we want to get to a completely paperless, cashless, faceless journey with our customers. We are also a B2B company. We are not a customer-facing company. So DMI leverages the enormous ecosystem that something like DLAI brings together of fintech startups that are trying to solve particular problems, right? So there are companies that are trying to solve for e-commerce point of sale. There are companies that are trying to solve for students on campus who need money to buy a laptop. There are other people who are trying to integrate directly with payroll companies so they can provide kind of, at the point of payroll, they can provide loans. We partner with each of them. And for us, as a result, the growth has actually, I don't really want to quote numbers here, but the growth has been beyond whatever we had expected. And we don't see that stopping anytime soon. And again, the reason we don't see that stopping anytime soon is that at a consumption level, India is way underleveraged. So as long as you don't end up lending everybody to the same small group of people, as long as the lending gets spread out, there is potentially for decades to come, this is going to be a growth story.
So when do you see this the whole lending activity, like on the corporate side and on the other side, apart from the consumer lending, pick up and revive as soon as possible?
So you're saying corporate lending?
Yes.
I think corporate lending, unfortunately, is going to take a little bit long. And the reason for that is that non-banks, which have been to a large extent the growth driver of credit in the last several years, given how constrained banks have been, non-banks are finding it increasingly hard to be in the corporate lending sector, and part of those are regulatory. Part of that is that capital markets don't really like corporate lending off non-bank entities, and as a result, the capital markets tend to reward consumer lending companies more than they reward corporate lending companies, which means that in the foreseeable future, corporate lending will continue to be the forte of banks. And banks, unfortunately, are constrained because of, asset quality is one, as a result of which prompt corrective action is another. So the fact that we have, 70% or close to it of the deposit base is sitting in public sector banks, it is going to take a little bit of time to clear out. Having said that, the good news is that IBC, NCLT, and the RBI's push to clean up asset quality has been far more successful than what many people had feared. And so maybe the turnaround in corporate lending will be quicker than would have been otherwise.
So on the regulatory challenges front, what are your expectations from the government, the budget, and the regulator as well to ease out the challenges which are with respect to the customer onboarding, KYC? Any suggestions you would like to put forward to the regulator?
I think, any suggestions that I would put forward now have all been in the public domain for quite a while and been discussed fairly aggressively. But to reiterate some of the points, obviously, eKYC was a very important tool for financial inclusion, right? It is not about, as in some cases is conceptually misunderstood, it is not about simply making it easier to lend money to the top of the pyramid, right? In fact, the top of the pyramid doesn't care as much about eKYC as the bottom of the pyramid does, right? You go into the villages, the farm laborers have only one form of identification, which is their Aadhaar, right? As a result, eKYC was hugely empowering for that population, which means that the government, we hope, is going to come back with a solution to how to let regulated entities such as NBFCs, right, have access to eKYC. And again, to be fair, a lot of progress has been made. There have been efforts made to give us alternatives to eKYC. We are just hopeful that it will continue to move in that direction and get better and better. The other thing that I would highlight as something which will require government intervention at some point is data privacy. And data privacy, we all know, is a high priority for this government. We expect legislation on this issue in the next few months. There is a draft bill already out there. But we need a lot more discussion, a lot more dialogue into what that final bill is supposed to look like. because data privacy cuts both ways. We cannot simply import data privacy templates from wealthy countries, because data has a different meaning in India, where for a large percentage of the population, data is a currency that they can use to better themselves, to give themselves more access to opportunities. And so we have to really balance and give the power of her data into the hands of the person whose data it is.
All right, Shivashish, thank you so much. Those were some really great insights.
My pleasure.
Expect the NBFC sector to revive soon. Thank you so much.
My pleasure. Thank you very much, Ishan.
Thank you for watching ATP Emphasize. Stay tuned.